The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, David White. And it is a great day out here. We've got a lot of action, let's say it that way. And we'll get into it in a minute. Right now, I need to turn my headphones down a little bit before I blow my ears out. Anyway, we've got a very interesting day out here. We're up, almost 18 points, 17 and a half points, let's call it. 2001, a space artichoke, and some change on the S&P cash, plus some decent volume, almost 2 billion shares as we start the show, which is up about 300 million from most of the last few days, last 3 or 4 days. So caught a lot of people napping on the wrong side of this market. I have been saying for a while that I think we're going to expire right about here on Friday, maybe a little higher, but there's nothing that they're going to do to let this market get in the way of making a huge payday for the Alibaba IPO. I am in cash because I can't really, I don't have an abiding belief, and that's some legal terminology, but I think it's a good word to use, abiding belief that I have an edge either up or down in the market. I kind of thought that the market was going to go sideways. Even to see that we went down 20 points was probably about 10 points more than I thought we would get. I didn't think we'd go down and test 1982 yet again after we did last week, but we did. But, 10 points in the S&P cash, that's not much of a move. So that we are up fairly extensively today is mostly, what we got down to 1979.06 this morning. We'll get into the reasons why the market is rallying. But I did talk a little bit about why I am almost all cash. I have one position in the Tech Insider. I like that position at the moment. Could it be better? Yeah. But on a market that's going nowhere, if you can make a little bit of money in the slop, probably not doing too bad. But what I did say is that there are 3 major events this weekend, or this week. I only am probably really sure about one, and that is that they are going to kick out a fairly decent amount of cash come Friday with the Alibaba IPO. It's going to probably price out somewhere between 66 and 68 bucks in the next day or so. But this is the fatted cow for Wall Street, and it is that. Unless you're selling puts and, put call spreads or something like that, where you're just hoping that it will go to zero on Friday, I can't see a lot of positions you could take. I don't like to do those kind of positions when the VIX is, 14, 15 or something. I'll do those positions when the VIX is 30, 35, 40 and make some real cash. Risk reward pretty poor. We're still at a VIX. What's the VIX at now? Okay, VIX is at 13. So you're just not going to make that kind of cash. I like to, basically if you're going to start doing spreads, I like to see, and trying to capture all that premium, I like to see a VIX that's fairly high, at least in the market, and, some implied volatility in the stock itself. I don't like to see stocks going nowhere, trying to make pennies. Why, if you can just hold your breath for a little while, you can make dollars. And that's it. I think a lot of people don't know or don't think of this as when they think of it as a job, they think about coming to a stock market and making money on a daily basis. And for some time, most of the times you can. I think you can make, or I can make, much more money by sitting back and looking at the big trends and not the small fluctuations of intraday movements in a market. I had 4,000 trades in 1 year, 2003 or 2004. I had my own high-frequency trading system set up and running. And guess what? After all that risk and all the downside and heartache about putting it together, I came back and made a lot more money just sitting on my tail waiting for one really big, sweet fastball hung out over the plate. I think that was 2003 or 4. And that one really kind of separated me away from intraday trading, besides the immense amount of work it was. And I started going more to the swing trades. But I make fairly decent money consistently. I make absolutely monstrous money every 4 or 5 years. And it's been like that ever since I decided to quit clicking away at every trade. There are still opportunities. I still day trade a little bit. When I saw the news come across the tape today that popped this market, I will occasionally dabble in the ES like I did today and make some quick bucks. But most of the time I sit back and try to get ready and wait for that big fastball. This is a game where you don't have to swing at every pitch. There is no fourth third strike on it. You can, or you can't, and you can take as many balls or strikes as you want. It's not something where you have to swing at every day. And it was a long way to my education before I figured out that I don't have to trade every day, and had to ask whether or not I was I was intelligently speculating or I was gambling. And I have a feeling that in that 2003 with 4,000 some odd trades, I was probably more gambling than intelligently speculating on the market. But just a thought out there for today. And again, I'm pretty much all cash. I'm going to be rested and relaxed when this market is ready to go. And I think a lot of people are going to be worn out. And, of course, could be problematic to do that. On this day in 1960, the Standard & Poor's stock index hits $31.86. It's a peak for the Roaring '20s bull market. Oh, this is 1929. I've got that wrong. Is that right? Yeah, that was 1929. I forgot to. It crashed. Let's fix that while I'm right here. It's nice that you can do that on the fly. Anyway, 1929 Standard & Poor's stock index hits $31.86. Its peak for the Roaring '20s bull market is not close above that level until September 22nd, 1954. When you hear that stocks always outperform in the long run, do you really realize just how long that can be? And it can be a lifetime. And like Einstein said, I always liked his little quote about relativity, about time being relative. He said spending an hour with a beautiful woman can feel like a minute, and spending a minute on a hot coal can seem like an hour. And that's really when time is relative. I always liked that for a guy who had it. Of course, the reason that we had the big pop today was the invisible hand of Doctor Who. No, not Doctor Who. Who? Mr. Who. Who's on first? Anyway, old Who over there, the owl, and I should probably just get an owl on my shoulder. Pretty much nobody does anything over there without the hand of Who. Who? People's Bank of China will provide the country's top banks with 500 billion yuan, Y-U-A-N. And so he's throwing fists full of yuan around, and that was pretty much everything that you needed to know. I think that part of this was just the horrifically bad numbers that we had for China's industrial sector over the weekend. You probably knew it was coming. I think that they probably discussed this stuff between the FOMC and probably that we had the meeting this morning. Probably they asked everybody around the table, and there was a phone call made to China, and the $500 billion started flying out of helicopters all over China in a matter of moments. And, of course, that made our market run. And you can always say that there's alternate histories. We didn't see the market. Would it have popped anyway? I think it probably would have popped or been up 10 points anyway by the end of the day. But certainly the rest of it had a lot of people on the wrong side of that market, and it moved fairly quickly. I also think that probably there's a lot of cash, $24 billion headed toward China on Friday for the Alibaba IPO. If China didn't do something, I'm sure our stock, Wall Street guys would have done something. There's cash to be made by all, and the pigs are just squealing out here, getting ready for the giant, I'm going to mix the metaphors, the giant fatted calf on Friday. So, there's still a great deal happening out here. The two big events. Another reason why I'm all cash. I don't know which way these two, although I'm pretty sure the way the third one's going to go. Scottish independence, too close to call. If they say no, which I would probably, if I was forced to bet. Since I'm not, I'm more than willing to stand to the side. That would probably push the euro up, the pound up, and I think those two represent the lion's share of the dollar index. So those two go up, dollar goes down, we get a short reprise, we get a little pop, we get options rollover Monday, Tuesday. If I start seeing the stock market gurus that run the option market, market makers, and they are probably the best traders that you can follow, I will watch for them, and if they start turtling, doing a little prairie dogging, sticking their head out, and they see their shadow, and they start buying some big protection to the downside, I will follow. But my guess is that we've got probably till late Monday, Tuesday, maybe even to Wednesday before we're going to see the path of the stock market between now and the elections. If they start really pushing this, maybe the Fed is going to get behind at least the push till the elections. But my guess is that, one, the market breaks mid-next week, it breaks after the election, or it breaks after the first of the year. And we'll see. Next week, if it doesn't happen, then I'll start looking for long opportunities. If it doesn't happen right after the election, I'll look for long opportunities till the end of the year, and then I'll wait until the end of the year. Anyway, we'll be back in a minute with one of the funniest, albeit saddest, things that I remember from my days when I did watch sports, but I remembered it, and I brought it up today. We'll be playing it when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, gold's up $2 at 12.37. We've got crude up $1.77 at 94.70. Putting a little juice in all those commodities. I think we had a lot of people ganging up on the right side and a little bounce the other way before I think we continue probably in the next week or so. Probably going to get a little bit of respite before we come down and start making probably even lower lows in gold and crude. But I don't have any positions in there. I would rather wait for some kind of washout and buy gold long term. If we can get a definable low. I was talking to Andy Hecht today, and I was kind of talking about the washout, and there were a few things that I was thinking of, and one of those was that certainly maybe we need to finally see the end of Paulson in the gold market. It may take something like that, where everybody gangs up on him and just destroys the price of gold and runs the guy out of town, tarred and feathered. We might see a few more people like that. Also looking for a lot of these gold companies. And interestingly enough, we were trying to come up with a really snappy catchphrase out here. And I came up with this with Andy. There are enough poorly run gold miner CEOs to fill the Mormon tabernacle. I can't even say it. Tabernacle Fort choir. Boy, it's a tongue twister. The Mormon tabernacle I can't say it today. Anyway, you know what I'm saying. Tabernacle? That's good enough. Anyway, there's been a lot of hand-wringing about the NFL and the latest video to hit and run around for the last 7-8 days or whatever it was. And I'd been thinking about something I saw probably back either in the 70s or the 80s, and I went searching for it and found it. But as far as I can tell, no one else has really picked up on this, and a few people around. At least I found it on YouTube, so we'll play it here in just a second. But outrageously funny and tragic at the same time. But Deacon Jones was talking. I think this interview happened in like 75 or 78, something like that. And, well, let's just listen to it here a little bit and see what you think the NFL was thinking even 40, 45 years ago.
Atkins' threat of breaking arms was the reality of the Deacon Jones head slap.
The head slap was to do two purposes. One was to give myself an initial head start on the pass rush. In other words, an extra step. Because anytime you go upside a man's head or a woman, then they have a tendency to blink their eyes or close their eyes, and that was all I needed.
David Deacon Jones was a defensive end whose head slap maneuver helped him intimidate offensive linemen
and
to
women,
the point where he often encountered little resistance on his way to the quarterback.
Oh, I like that. You hit a man or a woman across the head. You gotta just know that it was just one of those things. But that's like 78, 75, 78. The funniest part of it is you can find this video on YouTube. But when you go to the NFL webpage and look for it, they've edited out the woman part of it and just dropped his voice underneath some people running around on the field. So they probably did that in the maybe 10 years ago. Kind of funny that they knew this was kind of going around for a long time, and even 10 years ago edited it out. But I always liked that old Deacon Jones was so inclusive. You know, you're going to give a head slap to a man or a woman. That would be it. But funny and tragic after all these years. And Deacon Jones head slap. Speaking about domestic abuse, Apple has finally put up a web page that lets the iTunes users delete the U2 album that was forced upon them. The page provides step-by-step instructions for those people that use iTunes to finally take that big steamer of an album off of their pages and iTunes accounts. Finally, the yelling and screaming had reached such a peak. Yeah, some things were pretty good, but kind of forcing an album down somebody's throat, especially one that's not all that great, probably kind of tough. Talked about that last week a little bit, but that is interesting. CalPERS came out and is saying that it's going to take off an entire $4 billion investment in various hedge funds over the next year and pull that cash out. And I imagine we're going to see that continue. But there's going to be a giant sucking sound this year, at least for CalPERS, the California Retirement Fund. We'll be back in a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And so we go on, but tabernacle. I don't know why. Sometimes I just get words like that I can't pronounce, and you give it 30 seconds and it comes back. But I guess that's what they call being tongue-tied with it. Tabernacle. Okay. Chipotle. Tabernacle. Anyway, take the money and run. Well, we talked about this the other day. There's a few in here that I left in there. So we're ready to go on to some other news as charts and take a look and see what's going on. Wanted to see how some of these stocks were testing highs. Most notably right now we're looking at CSX, the train company, the choo-choo company. And we wanted to see about 11 million shares going through the July 22nd high at 31.59. We've gone through that today, higher than that at the moment, to 11 million shares compared to 4.4. Is that even right? 4.4? 2.6 right now. What do we have? We had 4.4 yesterday. But within 0.5% of the high, we had 4.4, which is still less than half. Today we've got 2.6. I would just be saying that you probably, on a lot of these stocks, if we don't get any volume, you just want to, normally I've talked about this before, you're going to be 1, 2, or 3 days early. And if maybe volume comes in the next day, that's fine. Maybe the Fed says something tomorrow like they're going to rain another ton of cash. They're going to make it rain down in here. That's exactly what you should be looking for. But to me, it looks like a lot of these stocks are starting to get pretty much tapped out at these highs. But like I said, I don't think there's a lot of money to be made over the last next few days. Probably if you want to trade some volatility, you can probably get that through the FOMC meeting right after noon, through the Scottish election. I don't know when we get the results, which I probably need to work on that, but I think that's Thursday. If anybody in the den lets me know exactly when we're going to get the results from the election, or probably maybe one of those things where, you don't know for a day or two. I got to check that out. But, of course, then we've got the Alibaba IPO. The market will be at least stable on Friday until they get that out the door. My guess is a IPO of this size, probably 11:30. My guess is it'll be late. Although it is a New York Stock Exchange stock, even though it's got 4 letters, BABA for Alibaba. And we'll look at that to see if there's anything else out here going on before I go on to the rest. I thought there was some other stocks out here that were interesting that I wanted to talk about. Yeah, there is. We've got a lot of stuff going on internationally out here. PBR, Pabst Blue Ribbon. And it's not actually Pabst Blue Ribbon. It's, what is it? Petrobras. That is Friday AM. Thanks. That's somebody in the den. So we're probably going to have that. Then we're going to have Alibaba, and we'll find out a lot about that. Petrobras, PBR, Pabst Blue Ribbon. You had a big movement in this one out here today, up about 8% earlier in the day off that now. But election results, of course, are coming through for them, too, in Brazil. And the big cheese there that's in power, Rousseff, is tied with Silva, according to reports. But we're going to have a lot of those Brazilian stocks move. And, of course, they're almost all tied to commodities. And our friend, Mr. Andy Heck, will be here with us tonight at 5 o'clock. I think he'll probably be in 3 o'clock hour with Tom O'Brien following the show, so we can talk about that. And maybe talk about how he's ready for his close-up, Mr. DeMille, because big Mr. Big, Andy Heck, Mr. Commodities himself, is going to the 16:9 high-definition screen next week. So maybe he'll want to talk about that. But we're going to see his smiling face in financial infotainment. And we'll find out more about that. Maybe he'll tell us. I'm sure we'll post it around TFNN. But he's going to the big time, besides being big time here. We've got such wonderful guests here, hosts at TFNN. See if there's anything else out here. American Eagle was up about 5% earlier. Big loser out here, WPG. WPG. And then we'll look at some more charts out here. Come on. Give. The old internet is not what she used to be. A little slow today out here. Come on. WPG. Yeah. Don't know why it's taking so long out here. Maybe it doesn't like the symbol. Maybe the system is down. Yeah, we'll see if anything else is out here. LGF, we'll look at it. We'll go back to WPG in a minute. IVB, got a question in the den. We'll get to that in a second. As always, you can email me when I'm at my palatial estate, and you can do that at path@tfnn.com. I see we already have one from Wayne that we will get to, and one from the den, so we'll look at both of these. LGF out here. Interesting, this is back up to its levels from the February 7th level with 2.8 million shares at 33.94, 33.54 with even higher volume on March 12th. And we're looking at coming into that with about, 1.1 million shares today, 900,000 shares, 1.1 yesterday. So we are seeing a lot of these stocks that are range bound. And when we look at them, it certainly looks like, maybe the movie business has probably hit a peak. This is Lionsgate, by the way, LGF. And I just don't, it seems to me like it's going to be very hard for these guys to make money or any kind of money in the near future if they keep coming out with horrible movies like they have. Okay, let's get and look at IBB real quick. Any chance of IBF biotech sell-off? There's always a chance. I didn't see any big earnings this week on biotechs, but my guess is that, you only came in just a little shy of the February 25th high. The more volatile the stock, the more I want to see that the volume is tested by very light volume. And that February 25th high of 275.40 had 1.5 million shares. We got it above it on September 2nd with 1.2 million shares, 278.78. And why 300,000 shares is okay. If this wasn't such a volatile stock, I probably would have pulled the trigger on it. My guess is that you're going to see it back up there when you're ready to pull the trigger on this thing. When that thing comes up there and you get 700,000 shares, maybe 800,000 shares, and that's all the volume you get on that, then it'll be time to pull the trigger. I like that the energy is really coming out on this last leg, but my guess is there's still going to be enough juice in this thing over the next probably 7 days, 5 trading days from now, that you're going to see this thing at least try to get back up to 275. And if it fails on volume, fails on volume there, I think we really are going to be looking at a good opportunity in the IBB. The other question out here from Wayne on a Tesla short, TSLA. We need the short interest on this to go to get these guys to bail. And why we're up a little bit, I suspect we're going to have a nice little gap up, maybe a couple of gaps up. We're going to see light volume, and either the shorts are going to finally say, hey, I'm not going to bail on my short here, and or they're going to get squeezed, which I would love better. And you're seeing a lot of volume come in very quickly, and then the thing go up maybe another 5-10 points, and you're going to see just no volume. In this case, we've got some giant sell signals in it, but what you want to do is kind of like Deacon Jones when he wants to slap his girlfriend or his wife. You want to count to 3 and think about it before you do it. And normally 1, 2, 3, you're going to be 3 days, 3 weeks, or 3 months early. In my case, you're going to get one more signal. You're going to want to call, think maybe 1, 2, 3 days, and then that's it. My guess is you're going to have an opportunity next Tuesday or Wednesday. But I have a feeling the market's kind of setting up for that the way it is. So, again, you can email me at path@TFNN and be like Wayne from Texas, and I will answer your question. I'm just going to say there's probably a great move in this thing back down to the low 200s, but what you're going to have is a little bit of patience out here. In fact, a lot of patience, and you need to see the shorts give up on this, which they have not. I think we're getting a reading on Friday for short interest, and if that is the way it is, I'll look at that during the break. But I think if that's our next reading for short interest, if we've seen that come down, then that may be the starter's flag out here for you establishing a position. My guess would be that the puts are probably fairly expensive on this, and I would love to see you, especially a short squeeze, get those option prices and premiums down to something manageable to make your risk reward correct. I don't think you can get that right by shorting the equity here. I think you can make money if you're quick, but $300 stock, I need it to go to 200. Yeah, would a 33% gain be happy? Yeah, but you need to make every time you can an asymmetrical bet And if you're betting on something like these, you really want to have the huge carrot out there, because you're going to be wrong a number of times on a stock like Tesla. So puts, and especially puts, probably out of the money puts, maybe something like 260s or 250s if this is back at 285, and buy some time. So I think I'll probably be looking at something like 260s or 250s next week, and probably into November. So that's it. Okay. Let's see what else is going on here. Oh, got a few other stocks out here. Again, you can email me, or you can call me at 877-927-6648. Some of these biotechs are out there. OREX, a therapeutics biotech company. I was looking at this. Some of these are starting to show some weakness. This one actually threw on higher volume yesterday, 13 million shares through the $4.76 level. Of course, it popped back into the trading range here. You get this much volume over the last 3 days in a lot of these, and you will get a market that moves sideways, then a little bit back up. It will gain energy and then blow through the lows. And that's another reason why I'm thinking the IBB might have a setup like that. Looking at gold, I had this in the newsletter this morning. There's a nice little gap that's been open in Royal Gold since the 19th of June. This thing popped up on 1.18 billion shares, so let's call it 1.2. It's got back into that little gap the last couple of days, 455,000, 600,000. And this is what's got me thinking that you may have, maybe a $3 or $4 or $5 run in Royal Gold for a few days, and all that's going to do is the same thing. We're going to get a little bounce back up, and that's going to form the ABC to move back down. Of course, your mileage may vary. I'm expecting very light volume, maybe back up to $74, $75, in which case, at that point, you'd really want to be looking to see what's happening in that volume, because, does it get to that gap that really happened on high volume on the 2nd of September? I think it can get at least into that candle, and that would be a nice little setup on light volume back for the next leg down out here. Again, I think Andy Heck was talking in the Tiger's Den today about what we've been talking about for a while, which is, and between he and I, he wrote a nice article that's also on Seeking Alpha, and maybe he'll put a link to it in the den, since I know he's listening, and maybe if you want it, you can just go to Andy Heck and Google Andy Heck and Seeking Alpha. I think you'll find his articles. But pretty much summing up at least some of my thoughts, he's very good at writing. I am not. I was actually programming some stuff on options to make my option predictions a little bit better this morning. Why not? Much was going on. But certainly when we look at Royal Gold, a nice little setup for an ABC. And, of course, just a standard retracement. The 318 would take you to $74.49. That would be a pretty good indication, if no volume's up by then, that maybe you get a 50% retracement, which would take you to $76.09. And no volume, and that sets up your ABC down for the next leg. We'll be back in a minute. Give me a call, 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, I wanted to remind you, if you listened to Tom's show yesterday, I did the lead-in. Had a lot of people speculating before Tom broke the big news about the $10,000 virtual trading competition, where you have no risk, and first prize is $3,000. There's several awards of $500 a day just for trading, whether you're good or bad. And you need to go to the webpage at TFNN.com and check it out. We should be showing it on Tiger TV right now. And go to that page and check out all the details. I know there's always a bunch of legalese in contests, so you need to read it. But sign up now. You got to do it before Friday. There's no coming in late to the party. You got to get in right now and get signed up before it all happens. And make some quick cash with absolutely no risk to you whatsoever. And can't ask, especially in a market that's kind of frozen here, can't ask more than that, can you? So it is good. So what else do we have going on? RTK. Rintech. A lot of stocks out here that are really setting up not too badly. I like to buy inexpensive stocks at the bottom. Of course, they can move a lot more than $1,000 stock going to $1,500. It's probably going to take you about 10 times longer than a $2 stock going to $3. And of course, it's all about time versus money. But you got to find a good setup. A couple that I see out here, if I'm wrong and the market is headed higher, there are some stocks out here that are making some fairly decent, good moves out here. One of those is Rintech, RTK. This thing gapped up on some decent volume, and that happened on the April 10th with 16.5 million shares. It's back down in this, and the highest volume we had is today with 4.5 million shares. Pretty much covered most of that today. I'm going to go look at this probably a little harder tonight. And again, if you want to find stocks like this, they're in my daily newsletter every day. And some of the other ones that we're looking at out here is Zillow. I suspect we may be making the B2C leg in some of these other stocks. But certainly you had to look at this in a Wyckoff model that said this is exactly where this thing is going to bounce. Huge, monstrous volume of 7.8 million shares back on, July 24th, when this thing ran up to $164.90. It is back down, and you would have seen this one early this morning in the newsletter, and would have been a possibility. I almost pulled the trigger on this thinking that it might be good for a day trade or two. But certainly there are stocks out here that are giving those a familiar Wyckoff style buy the retrace patterns out here, and that is something that you want to keep an eye out. And of course, expiration is going to be a great deal of this. We've got the news coming out tomorrow just after 12. I think it's 12:15 for the FOMC. Looks like we're going to have a great deal of news. Maybe we'll have an early polling results Thursday from Scotland. And then, of course, the Alibaba IPO, probably light volume, light volatility on Friday. And we're going to get back for Rock'em Sock'em robot action next week. So this is the time to get ready, get prepped, do a little workout. So that's what I'm doing this week. Anyway, catch you tomorrow, same bat channel, same bat time. Remember to sell when you can, not when you have to. Stay calm.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.